Greetings all across the fruited plains, leaf watchers, music lovers, adventurous, vacationers, blue collar, white collar. And I forgot the disclaimer. Here's the disclaimer. Anything you see on here is just the opinion of Gimbal Financial, and past performance does not equal future results. We are not recommending a darn thing on this show. This show is for educational purposes only, and we hope you walk away being educated, enlightened, entertained, and just, full of joy. And so we are just happy to be here with you. I'm happy. Greetings from Keith's desk. Keith's desk is the best desk in Gimbal Financial. If you ever want to come check it out. He's got windows, he's got nice art, he's got this great sand thing. Where'd you get that sand thing, Keith?
Eric Ellsworth.
Eric Ellsworth. I love to flip it over from time to time. And so come on by and sit at Keith's desk today, because where are you?
I'm in.
He's frozen is where he is. There he is. Where are you?
I'm in LaGrange, Indiana, if you can hear me.
LaGrange, Indiana. And so you're enjoying the beauty of Amish country.
We are. We've met some friends up here. We've just relaxed, and I was thinking about the disclaimer. I do not like to negotiate, and I bought a used car a couple weeks ago, and this show is kind of like buying a used car. We are not.
As you can tell, we are not.
We are not promising the world. We're giving input. And so when I got that used car, I didn't have high expectations, but our goal is to give you something reliable that you can think about and help you throughout the week.
My favorite thing about Keith's newly used car, though, here's the deal, is it was kind of a legacy purchase, right? It is a car that could be used now. You could drive it to Colorado and back. It's something that a Tyner kid could use someday. Tyner kids, hope you're not listening, because past performance is not a guarantee of future results. But it has a lot of life to it. I love the idea of purchasing a car with a legacy effect to it. That's a pretty cool reason to buy something.
I'd like to say that I was trying to put a smaller carbon footprint, but really I was just trying to save money. My Suburban is we put it in the back of the garage for special times now with $5 or $4 gas. But this thing, I haven't checked it out yet, but I'm pretty sure I got 40 miles to the gallon, which I don't even know what that means.
So Eric was on a walk last night with his wife, and they were taking pictures. They were planning in advance for their Christmas card. And the idea came because he was on a walk, took a little breather from the office, and was on a walk and discovered just how beautiful the Monon Trail is this time of year. And I just wanted to share a couple things with you guys. These leaves right here are some of the most beautiful yellow leaves. And I mean, I always say aspen tree leaves would be the best, but these leaves are so beautiful. And it reminded me of being a kid, because there's a tree off Royal Oak Drive in Muncie, Indiana, that had this leaf pattern. And it sparked all these memories of my mom and I creating my little leaf project booklet. And so here's the benefit of your iPhone. Okay, so here's a picture of those leaves. And did you guys know this? Like, if you want to know what type of leaf that is, all you have to do is hit this little I button, and then it
Ginkgo.
says, yep, look up plant, and it tells you what it is. And so, we've said it before that these phones, and I know they're going up in price. like a new iPhone is probably $1,000 or close to it, I would think. But you've got a leaf lookup machine inside this phone, and you don't have to have the encyclopedia, rack behind your desk. I mean, these phones actually save you money over time with all the technology that's in it. And so I decided to, get into that and look up a whole bunch of leaves. And then I also decided to remove my Facebook app for about the 100th time. And so I'm trying to stay involved in the present, what is going on today. And one of the things it just continues to trend. It's beautiful outside. And so I hope this weekend you guys are able to get out and just really enjoy the beauty of the creation. And I know that's what you're doing, Keith.
Yes, sir. We're exploring the world.
Did you want to drive? You asked for control of the tools. Did you want to look at something specific?
Well, I've got something, but my internet's kind of sketchy, so I'm not going to try to push it. I'll just talk through it. But the number of stocks below their 200, their 50 and 21-day moving average. We added one stock this week to the pool of stocks that our database follows, but clearly there was some declining health in the shorter term averages. The market was really rough this week. As of when I looked at the market before we got on, the S&P is down 3.5% since we talked this time last week. We took a couple trial positions. We put about, I think, 8% of portfolios at risk in the last 10 trading days, I think it was. And we locked in a loss on that. And when I look at the math of that, we took
You and I were doing the same. That's what I did this morning as well. Oh, did you freeze? So there he is. You were talking about the math of it.
Yeah, we took a 0.18% loss, which would be 0.18% on $1 million. What is that? $180 maybe, or $1,800. That's what it is. 1,800,000. Yeah. And if it were, if you just had $1 million in the market, you lost $36,000 since we last spoke. And so that's conceptually how we're managing risk for you. We won't always get it right, but I feel really good about those trades. I thought they were good buys and good sells. The market, in my opinion, is a little too volatile right now. We'll see what happens after the election, but my gut feeling is it's going to stay volatile for a couple of weeks anyway. At least next week, I got a feeling there's going to be a lot of ups and downs. People on both sides of the aisle are going to be upset about something next week, would be my guess.
Yeah, I think you're right. The psychology of selling is really an important one to learn, and it doesn't have to be so binary where it's all in or all out. Even purchasing, we stuck our toes in the water here this week. We had a nice uptrend going in the market. Things look pretty good, better. And we weren't above the 200-day yet. We like to be above the 200-day. We really like to see that 50-day trending up, and we'll show that in a second. But when the markets has that 50-day trending up, that's just a nice place to be investing. But we did get an early buy indicator, and so we stuck our toes in the water. And just like Keith was doing the math, I had to get a slide rule out and calculators to accomplish all that Keith did. But I was doing the exact same thing this morning. I was like, okay, what did this really cost our clients? And what would we do differently next time? Well, I think we do the same thing. And so, if we're wrong, we can always buy back again. But the psychology of selling is really important. And that could be taking a little bit off the table as you lock in some gains. You don't want to take it all because that thing could keep running. But there's also times where if your buy reverses, the psychology of holding a loss and hoping it gets better can really drain your mental attitude. And you could miss out on future opportunity. And so, yeah, even though we lost money, I think it was a beautiful trade.
I hopefully we've helped educate our friends and clients that these transactions that we do, that doesn't create any extra revenue for us or any extra cost for you, other than whether we lock in a gain or a loss, what those might do. But there's no transaction charges that they're paying for these things. And when I got in this business in the 80s, that's what all the marketing was. Your broker's ripping you off whenever he wants to do trades. We're not making any more or less based on the trade. We're just watching out for you.
Yeah, we're trying to protect your capital. Speaking of protecting capital, let's take a look at the markets. And so we're going to take a look at the Dow Jones. This is a representation of 30 companies. That's it. And I think the creators of the Dow Jones have just done a fantastic job trying to make a picture of what the backdrop looks like for the entire stock market, all the stocks available. So this is the Dow Jones. And as you can see, let's see here. We had a nice little uptrend going. It went right up to its 200-day moving average, which is this black line. Do you notice a pattern here? It did it over here this summer. It did it in the spring, and it went through, and then it's kind of bounced off. And so it's going to be interesting to see if it can hold. And I think a lot of it has to do with the elections coming up and some data on how consumers are spending money and what jobs look like. But we've had 4 big rate increases in a row, and we might have another one. We don't know, or we might not. We just don't know. But here's what we do know. This chart tells us data, and we can listen to it. And so when there's sellers coming in and it's moving away in the opposite direction, we can just exercise patience and be a little cautious. The S&P 500 stocks, it didn't rally up to the 200 quite like the Dow Jones did. And then the NASDAQ, this is, Keith has spoken several times about the FANG investments, the high flyer tech companies that have really done so well over the past decade. But, this index has quite a bit of tech companies in it, and they just haven't done much at all. It was 1 year ago that the NASDAQ was nearing its peak back in November. And you see it right here. This is November 5th, 2021, and you can see it was rocking. And then shortly after that, it started to sell off. Lastly, I want to take a look at some of the smaller companies. Again, we say, smaller companies, smaller publicly traded companies. These companies still have jets. These are still big places to be employed by. But it rallied up close to its 200-day, you can see here, and then came off it. And so now's the time just for patience. And that's where we've been for, goodness, this year. But Keith, anything you want to add on current markets before I go back in time?
Yeah, if you'll click on the S&P 500 there, Doug.
Yep.
Then click on the 4 black squares up there to the top right of the screen.
Oh, yes.
Is it populating?
Yeah. Oh, maybe I need to reshare it. Hang on a second. It probably opened up a new window. There we go. How about now?
And if you can punch in the, maybe just punch in DIA there. That's pretty reflective of the Dow Jones. Yeah, and so I just want to point out that normally the S&P. So we're just comparing the S&P 500 with the Dow Jones there. That DIA is a symbolic ETF. We're not recommending that, but it symbolizes the Dow Jones. And I think really what you're seeing in that it's going to use the word divergence. That's a big word. That parting of ways between the S&P and Dow Jones. I think the main difference between those is the S&P still has a heavy weighting in those FANG stocks, and I don't believe the Dow does. And so the very well, you could see the Dow outperform. If these FANG stocks don't start to get some strength, you could see this divergence continue for a while. But that's the biggest difference, I think, that I can see between those two indices.
Yeah, that's a good point. We talked about the weighting of, even Apple. Apple has a large weighting effect in the S&P 500, the NASDAQ, and yeah. Anything else on the markets?
No, I was listening to somebody I respect a lot this week, and they said this is the worst market in many years, and most people probably wouldn't recognize that because of the indices. But if you are an individual stockholder and you didn't happen to be fortunate to be in, say, a local medical company or pharmaceutical company, there's a lot of stocks that have really been beaten up this year in record kind of percentages. I think we talked about the 80-50 rule, that after a market peaks, that 50% of the former leaders will drop 80% and 80% of them will drop 50%. And we've seen that in a lot of circumstances. So that's a rough market.
Yeah, one of those stocks I was looking at this morning, just going back to educate myself, is a stock that a lot of kids use on their phone to communicate to one another. And that app, that piece of technology, that company has really taken it in the chin, and it looks like a mountain peak that just it went up and then it just comes right back down. And so those things take a lot of time to iron out. But there's also hope that new leaders come in. And so that's the thing that we stay optimistic and looking for. And, this morning, Eric and I were taking a look at some historical charts, and I started in the business right at the time in 1998 when things were just really good, and it was a boom. And so Keith, you started in 87, right? Was it October of 87? That was your first?
No, I started in 1986. So we had a good rally in 86, but that came to an abrupt ending in October of 87.
So check this out. And we've shown this before, but if you take a look, so here's right around the time that I graduated from college in 1998 and hopped on. I'm going to be a stockbroker. I'm going to be a financial consultant. And the market just is chugging straight up. It was an unbelievable time. Some of you remember that. And this is what you probably remember is you heard a coworker say, I've made more money in my 401k than in my W-2 last year. And so they start thinking it's time for me to quit working and just become a professional stock trader. Well, do you remember those days, Keith? And so here's this is so interesting to me, is if we take the peak of the NASDAQ and we just extend it out, that's a lot of time in between where, it was down. Now I know if you had a 401k and every paycheck you were putting some money to work, that still worked out pretty decent for you over time. But if you were retired or maybe you took a job where you had less income coming in, that was a pretty tough time to be an investor. And so here we have, after that period, everything's looking great, and we're going through expansion. And it's kind of reminiscence of this slope way over here. My point in sharing all this with you is down markets happen. And we just need to be prepared for them. We have to protect our mindset during that time. And this is where some of the financial planning comes into the picture, where you have a basket of maybe safe investments. You have a basket of investments that might pay income, and that could be a myriad of different things. But there will be a time when some of these growth and type investments look good again. And until then, we just need to stay patient. You know, if you took a Gimbal financial client statement to any other broker in the city of Indianapolis, they're going to see a lot of money market these days. And money market for long term, that's terrible strategy. And we understand that. But in the short term, in the near term, until the market gives you a reason, it doesn't look too bad. Doesn't look too bad. And so something we've been encouraged by is just even higher money market rates. We got to celebrate the small wins, folks, and we'll take it. And so it's been good to see money market rates moving towards the saver.
Well, it is interesting to watch the economy do its thing. We're staying here at the Highfield Manor in the LaGrange area, and Christina and Clarence are great hosts, and this is just a marvelous place if you want to get away. Clarence has a concrete business, and we were having dinner with him last night, and he can't get concrete dust, which I don't even know what that really means.
I don't either.
But evidently it's part
Sounds
of
cool.
It's a big deal for having concrete. Without it, you don't have it. And so, you know, they're trying to build a warehouse for Amazon. So here's this family business I'm literally surrounded by fields and Amish horses and buggies. And here's a man running a business that's trying to help a major, you know, one of the FANG stocks, and can't get concrete dust. I don't really understand completely how all the supply disruptions have happened. I think I give credit to our government regularly. I think if you shut down an economy, you screw things up. And so you can't protect everybody's health, which I think is what this last 2 or 3 years have shown, but you can definitely disrupt the economy in ways that nobody could ever anticipate. And so hopefully, if you're able to tell your children, your grandchildren, whoever, is to not support a government that wants to shut the economy down, because who would have thought you couldn't get concrete dust? It's been 2 years since they shut it down, but at the same time, you just can't shut massive machinery down. You can't shut the economy down and expect it to not have some disruptions that could be long lasting. And we've seen a number of those, but we remain optimistic. When I think of this business right outside the window here, I'm just impressed that the ingenuity of American people continues to thrive in up and down economies.
Yeah, and I think it's going to be interesting in the next 18 months. The market is a leading indicator. And so it's going to be really interesting to see what happens with concrete, diesel fuel, all the things that are in the news right now. It's going to be interesting to see how it plays out in the next year and a half. You know, it's going to be a big week in the markets. We've got an election coming up. There's going to be a lot of talking heads out there, and those talking heads are in the business of advertisement. And advertisement, you know, captures you, it sucks you in. But one way to get advertisement is to talk about shocking issues, get your emotions all cranked up, whether that be fear or joy, I don't know. But it's going to be a cocktail of all of that stuff. And so this weekend just might be a great weekend to avoid your favorite news channel, get outside, enjoy each other, and just know that we'll take action. We'll take action, and the market will help us. It'll help guide our decision making. So anything else to add, Keith, before we sign off?
Well, I would encourage you, I don't know which side of the political aisle you're on, but clearly the country is 50% on each side of the political aisle from the last 4 or 5 presidential elections. And so don't let whatever happens control your life. Your life will continue on. And if your team doesn't win, there's another election 2 years or 4 years out. And don't let whatever the results are dictate your financial outlook. We are sorting through that data on your behalf. We were fairly unemotional about the data. We have opinions about political things, but what we're trying to do is to protect and grow your capital with the least amount of risk that we can. And we will sort through all that information. My guess is what will happen next week is there'll be just a lot of volatility in the markets because of different people thinking, well, my person lost, so I'm going to sell out of the market, or my person won and I'm going to buy into the market. And all that happens every election. And I used to think that way. And I remember an election where I was so far wrong about it based on my politics that I didn't have this avenue to say how far wrong I was about the markets. But there's clearly historically, I think the best markets have been with a split power force in Washington, D.C. That means they can't do anything. And I'm a big advocate of politicians doing nothing, like whether it's local, state, or federal. I've mentioned that to you all a lot, that they're all the ones that have helped create this inflation that we're fighting through. They want to blame somebody else, but they need to look in the mirror. And so hopefully the Federal Reserve has kind of disrupted things in that area. And so there's going to be a lot of uncertainty for several weeks. So be patient. We've done a very good job, I think, of keeping you in a reasonable place during this market. And we'll keep, as the market gives us indicators, we'll put our toes back in the water when it's appropriate.
And, regardless of the outcome of next week, one of the things about the capitalist is they want to make money. Money never goes out of style. They want to make money regardless of who's in power or not in power. They've got ideas they're creating, they're taking risks. And so the stock market, it just is so resilient, and we're going to have better times ahead. So just keep the faith, keep enjoying the important things in life. And Keith, we'll just look forward to seeing everybody next week, right?
I am, and I thought you were going to pull out that old Wall Street movie line all ago. Kid, money never sleeps.
money never sleeps, kid. Isn't that where see, it's like a 3 a.m. phone call or something like that?
Something like that. Yeah. Well,
don't
don't call us
at, like ginkgo leaves or something. Yeah.
Don't call us at 3 a.m. We will be sleeping. So.
Yeah, oh, and speaking of that, one last thing. We are very excited at Gimbal. Did you know we have a new phone system today? And that phone system is through the interwebs, through a really big company out in Seattle. And I think they're out of Seattle. And anyway, we've got a new phone system. And one of the things that the SEC does not really like is a text message. And so we can't really do anything with a text message. And so if there's something that you want done and you want it done quickly, normally a text is great. Hey, Keith, come over and rake my leaves. He'd be over like that. But if you want something processed like, hey, Keith, send me $500, make sure you give us a call. Tell all your friends to give us a call too. Okay, that's it for the week. We'll look forward to seeing you next time.